Hello traders, my name is Horvat and welcome to a new video analysis in which I will cover Euro Dollar, New Zealand against the US Dollar, Dollar Yen and Silver. So on a monthly chart of Euro Dollar will remain bearish here for lower prices into wave C. We are tracking a 5-wave ongoing decline in this wave C, but looks like that this pause for the last year and a half, it's just a temporary sideways price action within downtrend. So I think this is wave 4, which can be a triangle. Now what I see here is that this wave 2, actually sub-wave 2, lasted around 22 to around 20 or to 22 months. So, and now in current black wave 4 we are in progress for around 18 or 19 months. Okay, so actually, as you know, waves 2 and waves 4 are sometimes very similar in distance, okay, which is not the case here. You can see a very deep wave 2, which while wave 4 is going sideways, or they can be very similar in time. So I would not be surprised if we are now approaching to completion, to final stages of this wave 4, and it will see push to the downside by the end of the year. So definitely I will stay bearish and focus on a wave 5 decline. On a daily chart, I am actually already tracking potential late stages of this triangle. In wave 4, we can count 5 subwaves A, B, C, D, and E, and notice that each leg has a corrective structure. Well, this was a 3-wave move up for a wave A, then you got a 3-wave decline down for a wave B, then you got a 7-leg of recovery, which is still a corrective leg, a corrective movement but complex, WXY in wave C. Then we had a nice 3 waves down for a wave D, and it looks like that now we are already in wave E with 3 waves. Now sometimes wave E can be very small compared to other legs, so I would not be surprised to see wave E near completion and turn to the downside this month. Okay, however, it's important to wait on confirming price action because market is still sideways in the middle of the summer, so definitely we need more evidences before we can continue to look lower. Now here on 4-hour chart is my first wave count that I'm tracking. This is actually a very simple level as ABC rally up in wave E, but this recovery over the last 24 hours is not confirming my wave count at the moment. So definitely, as I said already yesterday on our Elliott wave counts page, I mentioned that we need to see a break, decisive break beneath this bearish level at 1.1070. So if we will be able to see this level broken, then this recovery would be confirmed as a completed 3-wave ABC movement, and then obviously I would look straight to the downside. But at the same time, this invalidation level should not be breached. Okay, so that's my one count, and the second count that I just prepared it is WXY up in wave E, which means that wave E could go to higher levels. It's for zigzag for W, then you have 3 waves down for wave X, and now actually this could be second zigzag underway. Okay, so if we are tracking or focusing on this ABC movement, then we know that wave C will typically be very similar to distance of wave A. Okay, so this was a very sharp move, can be wave A. This was move down, that can be wave B, and this could be now new wave C underway. Okay, new impulsive wave. So if we focus on some people levels, then we can see a quality level that comes in very important at 1.1330. okay, and this is actually around 78.6% retracement of this sharp move down. Okay, so actually this is quite interesting region from where I will be looking for a bearish reversal if market will invalidate this wave count. Okay, so actually has both counts have 50-50 chances, but somehow I really like the second one. Okay, because I think that there are a lot of stop orders above this swing high, so definitely I would love to see this region cleared out before market turns to the downside. Okay, what I really like, why I really like this 1.13 area up there is also based on this weekly technical chart, which shows in that same region an important, very important 100 moving average on a weekly chart. Okay, so maybe we'll see a test of this moving average and then turn to the downside. Okay, this would go perfectly then with our Elliott wave count on this alternate view. Okay, so for now, still, as I said, we are in the middle of the summer. Market is very slow. We do not have any nice impulsive reactions for now. So on the euro dollar, I would stay aside until we see maybe a clear breakdown from current levels, or after we see a test of these resistance levels and then impulsive bearish turn. Okay, so that's for euro dollar. Now I will take a look for a change at New Zealand dollar, and the reason is because as you know, market expects a rate cut today. So I think it would be nice to look at this price action, because we have some very nice pattern here. Actually, what I'm looking at here is potential WXY to the downside still ongoing. It's actually not a very clear wave count. I don't like it too much, but what I really like and what I think it matters the most is this current recovery. Okay, this recovery is very slow, choppy, and overlapping. So I guess it can be corrective. Also notice that we are now trading back to the area of a former consolidation here. Okay, so this was our consolidation region, and now we are here. So there were a lot of noise in this area, so I'd not be surprised if something similar will happen here, which means the market could reverse down from it. I will take a look on the substructure of this recovery here in Black Wave B. I labeled it as a corrective movement, and the reason for this is very simple. Notice that we have a lot of overlaps. Okay, here we have seen a nice move to the upside, a free wave movement, but then market didn't move sharply to the upside. Actually, this was a very slow recovery, followed by a new pullback that made an overlap, obviously a very deep overlap with this wave A, and then you have another sharp recovery and another free wave decline again that made an overlap. Okay, so you have some overlaps here which suggest that market is in a corrective moving in a corrective phase to the upside. So I think that upside can be limited, especially if we focus on the Elliott wave structure, which shows that we can be making here an ending diagonal. As you know, this is a very powerful pattern that predicts turning point. Okay, so actually market is very slow when ending diagonal is unfolding, but when ending diagonal is finished, then prices will explode, but in the opposite direction. In our case, this means I would expect a sharp move to the downside. Okay, but before we may look for weakness, I'm expecting slightly more upside here. Why? Because as you know, each leg in ending diagonal is made by free waves, and obviously this free wave structure is now on the way up in a red wave pipe as well, but still we need to take these previous highs out and then turn to the downside. Here on the 4-hour chart, on a closer look, we can see that wave 4 was actually a flat correction. Okay, this was wave A, then you got the wave B, sharp wave C down, and now new free wave rally is underway. Free wave structure up for a red wave 5, as I mentioned. So this was an impulsive wave A, and one of the most important structures why I turned temporary bullish here for higher prices into red wave 5 was this free wave setback. Okay, clearly this was a free wave retracement, A, B, C. Okay, so now you have also a broken channel, which means that market is turning higher. So I think that we could see a spike to the upside above previous swing high here, and maybe hit this 100 projection level, which where wave C, black wave C, would equal to wave A measured from this end of wave B. So here I would expect a bearish turning point. So for those who are interested to look for possible shorts maybe on this New Zealand dollar, then I definitely suggest to wait a little bit more and see what happens today after New Zealand rate decision. And then if we'll see a bearish turn in 5 waves, only then I would probably looking and considering shorts on a pullback. but for now, as things stands right now, I think it's better to stay aside and just wait on this market to confirm that this wave B is finished. Okay, now let's take a look on dollar yen. Now dollar yen weekly chart is showing a nice decline for the past 12 months. It appears to be an impulsive decline. Firstly, we thought that wave A is already finished here, but based on the recent developments, notice that this bounce clearly was made by 3 waves, okay, A, B, C. So I think that this represents a corrective movement which is finished. Also, the important is that market took out this trend line support that acted as a resistance here. So I definitely expect more weakness now down into wave 5 that will take us beneath 99 level. Okay, on the 4-hour chart, we also have some nice personality. This is our primary count, not count 2. We also have a nice personality of a bearish impulse. Clearly, wave 1, 2, subwave 1, 2. Then you have extended wave 3, 4, and it looks like that now we are headed lower into wave 5. I think that wave 5 could spike beneath this red wave B swing low, and before market will turn to the upside into a new corrective rally that then once again could find resistance and this important trend line. Okay, so for the short term, I expect more weakness, let's say for another 150 pips, while market is trading beneath this swing high, but then be aware of a new corrective bounce before further weakness occurs. Okay, so that's for dollar yen, and now let's take a look on silver. I decided to look on silver because I think the price action is a little bit clearer. We have a better pattern, I guess, than on gold, but anyhow, if silver will go to the upside, gold, as you know, should follow the same. So firstly, on the monthly chart, I labeled this as ABCX ABC decline. This actually projects that we are now at the start of a new bullish phase on silver, but the important is always to focus on minimum expectations. So no matter what happens, I would expect a 3-wave rally, okay, like this. So the question is, what will happen here then? Maybe we'll continue higher, or maybe we'll continue lower. But this phase, okay, this one, I think it's now underway. So I think that definitely we can expect more upside on silver over the next few months, maybe even years. On the weekly chart, what I'm looking at is a nice uptrend here, supported by this trend line. Clearly, we are very bullish here, as you can see. Also, we have higher lows and higher highs, as you can see. Okay, so definitely I want to stay bullish here, and I'm looking to see move up towards 22 level, maybe 2180 could be a short-term target. The reason why I'm looking towards this area is also because here we have sideways price action, market slow down after a very strong move. So I think that this is posed with an uptrend. Ideally, it's a triangle. Okay, I'm tracking an extended either black wave 3 or wave C, whatever. But in the short term, it's important that this is a correction with an uptrend. So I am expecting a new high to be seen this month. Okay. Now triangles are 5-wave patterns structured with A, B, C, D, E waves, and here on the 4-hour chart you can see clearly this was a first wave down made by wave A, made by ABC substructure. Then you have seen another 3-wave rally here up for a wave B, then another 3-wave decline down for a wave C, and looks like that we are now in final stages of wave D. So technically speaking, we still need another pullback down into wave E before market could finally explode to the upside into wave 5 of extended wave 3 or wave C that I showed you on the daily chart. So levels that I would pay attention when the pullback occurs would be around this wave A, okay, and wave B. And that's also come at this red trend line. Okay, so let's say around 19.60 up to 1990 could be very interesting for a zone for this market to continue to the upside. Now, obviously, there are chances that market will continue straight to the upside from here, but no matter how you look at it, if you're a little bit more robust, and keep it very simple, then we can say that market is in consolidation phase, and that sooner or later we will see a move to a new high. Okay, but if we get a wave E, maybe then this could represents even better opportunity for you to get in at lower level or better levels. Okay, so guys, thank you very much for your attention, and I will catch you with new updates as always on our intraday page. Have a good day. Bye.